Imagine waking up one morning, you check your investment account, and your balance shows $100 million. It feels unbelievable. Now imagine waking up the very next morning. You open the same account again, but this time, almost everything is gone. This isn't a movie, it really happened. Today, we'll discover how one man became incredibly rich and then lost almost everything, almost overnight. Meet Bill Hwang. Bill was an experienced investor who founded his own investment company called Archegos Capital Management. He wasn't a billionaire when he started, but he believed that by borrowing huge amounts of money and making the right investments, he could build an enormous fortune. At first, banks trusted him. One bank agreed to lend him money, then another, and then another. Soon, Bill had access to tens of billions of dollars. Instead of investing only his own money, he used borrowed money. This strategy is called leverage. For a while, everything worked perfectly. Bill invested heavily in a small number of company stocks. As those stocks continued to rise, his wealth grew faster than anyone expected. His fortune increased from around $100 million to nearly $20 billion on paper. The banks became even more confident. They kept increasing his borrowing limits. Everything seemed perfect. But there was one dangerous problem. Almost all of Bill's fortune depended on only a few stocks continuing to rise. Then, the market changed. Those same stocks suddenly started falling. Normally, a small drop in stock prices isn't a disaster. But because Bill had borrowed so much money, even a small decline became a massive problem. The banks immediately demanded more money. This is known as a margin call. Bill couldn't pay. The banks had no choice. They started selling billions of dollars worth of his shares. That huge selling caused stock prices to fall even faster. Within just a few days, more than $100 billion in market value disappeared. Several major banks lost billions of dollars, and Bill Hwang lost almost everything. So what can we learn from this story? First, never depend too much on borrowed money. Leverage can multiply your profits, but it can also multiply your losses. Second, never put all your investments into just a few companies. Diversifying your investments reduces risk. And finally, the stock market can change at any moment. Even the most experienced investors can make costly mistakes. Bill Hwang's story reminds us that becoming rich is only half the journey. Keeping your wealth is often much harder. In finance, greed grows quietly, but risk arrives suddenly. Now tell me, if you had $1 million to invest, would you risk everything to become a billionaire? Or would you choose the safer path? Let me know your answer in the comments. And don't forget to subscribe for more true finance stories.